Welcome to a new update. In this update, we are going to prepare ourselves for CPI, which is going to be out tomorrow. Volumes are on a very low level. Volatility is a little bit on a higher level, but that is usually caused by derivatives being moved, as we saw one yesterday. So we're going to discuss that, and we're going to prepare ourselves for what is going to come, which is CPI. Before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also make sure to check out our public Discord and our Crypto 101 course, which is 8 hours of content to prepare yourself for the bull market, which you can find in the description beneath. And thanks to our sponsor OKX, which gives you $60,000 of sign-up bonus maximum and a lifetime 20% discount on trading fees if you sign up through the affiliate in the description beneath. Unfortunately, not able for US and Dutch clients. When we're looking at the entire macroeconomic perspective and also about Bitcoin, we know that there is a certain low volatility period right now, which is comparable to 2019, where we didn't see many movements taking place either. Bitcoin is just chopping around between 30k towards 31.5 to 32k. That is where Bitcoin is currently relying on. And actually, and it's typically for crypto markets or crypto native people, we are looking and are fully focused on what CPI is going to bring. And what is CPI? It's a consumer price index, and it is a measurement or indicator that the Fed is using when they are deriving or measuring the FOMC policy, which is going to come out in 2 weeks from now. And CPI is one of the cornerstones whether or not we're going to have a rate hike taking place. So tomorrow at 2:30 p.m. Amsterdam time, we're going to get that data, which is 8:30 a.m. Eastern time. What are we looking for? We can see it on the screen here, which is we've got CPI, which is the regular one, the month-to-month data, year-to-year data, and we've got core CPI, month-to-month, year-to-year. The month-to-month data has been 0.4% for core CPI last month, and the projections are that we're going to get 0.3%. The year-on-year data for core is relatively sticky, so in terms of things that are super important for the event tomorrow, the core CPI is definitely the one to look at. If this is going to drop beneath 5, that is going to be very positive for the markets, and that is when you start getting a serious movement on the markets. Anyway, if we're going to get a case of core CPI going towards 5.1 or higher, to be fair, that's going to have a destructive effect on the markets, especially for Bitcoin, as Bitcoin is very correlated towards the strength on the DXY and such. So I think that if core CPI comes out higher than expected, it's going to be having a bad impact on the markets, and most likely the expectations for the bonds to continue rallying to increase the rate hike potential as well. And that is going to be giving an impact on the outlook through which risk-on assets are going to do bad. So core CPI we've got here 0.3% expectations. Core CPI year-on-year 5.0% expectations. We've got CPI, which is the regular one, month-to-month 0.3% expectations, and last month came very positive. This time we can have a very positive outlook too, but the expectations are 3.1, and I think that even though CPI comes in at 3.3 in the month-to-month and 0.2, we probably are going to rally anyway. So tomorrow is super important for the market environment, through which it is one of the cornerstones, as I mentioned, for the FOMC to start digesting whether or not they're going to continue the rate hikes. Additionally, we've got PPI the day after. We are going to have a negative PPI, most likely, while CPI remains positive. It doesn't happen too often, but it's often an indicator where CPI is going to go to. In this case, the PPI's expectations are 0.4% and core 2.7%. So that is where we're going to get. But what we do know is that the case for a potential recession starts to increase. So the amount of consumer spending has become more negative. Also, the unemployment data last week started to become negative. We are going to look at the jobless claims this week to see whether that's going to rally. So slowly but surely, a long time, approximately 10 to 12 months after we started this entire theory or entire policy change where we started to hike, we can see the impact on the economy, through which, as I mentioned, we're getting into the final stage of the rate hike policy. And I think If CPI and PPI come in positive, and also when the economic data starts to become negative, that is when gold starts to rally. And gold also has an additional one, which is the BRICS and Golden Standard that we're most likely going to get in August, which is going to give more pressure on the strength of the DXY. Hence why you can see that gold and probably Bitcoin follows gold, as these two are very correlated to each other. And finally, we also have the case of a potential ETF to be applied, and we still have the XRP case that is going to give some more data, and Binance with SEC and such. So lots of things to take into account, but all we do know is that Bitcoin has been going into a sideways period, but also what we do see is the fact that the DXY is currently having its downwards momentum still. So since the bottom here in January 2021 and actually bottoming out in May 2021, crypto has been seeing some serious weakness in the sense that since this bottoming procedure that we had in September, October, November, and we have had a bottom on Bitcoin, but also a top on the dollar, through which we are moving into a downward segment here for the DXY, which means we've had this cascade. We took out the low, started to rally up for a little bit and found ourselves in a range construction, as you can see, testing support 2 times, making lower highs, another lower high constructed here. So the chances that we're going to smash through this support is pretty significant, through which I assume we're going to drop even towards 96.7, which means that ultimately we might even get towards this stage here, which is 89, through which I think that weakness on the DXY is beneficial for crypto markets, as it's going to fuel even more. Although there are multiple arguments to be made. So this is something that you need to watch. If the DXY is going to bounce up tomorrow because the CPI comes in more positive, because core CPI comes in more positive, that is where you're going to see Bitcoin correct down, and we'll discuss in a little bit which levels we should be watching. Now, what you should also take into account is the 2-year yields, or at least the yields as an overall view. We are looking at the 1-year yield structure, which is currently still rallying up, right? But we are on the edge of returning towards equilibrium here. So we've had a break to the upside, technical perspective. We've seen some momentum when it comes to the 1-year yields and the 2-year yields, because the latest FOMC meeting, we saw Powell speaking about more rate hikes to be endured. Since then, we saw positive data from the unemployment markets or the labor markets, through which we see this breakout, and now we see some sort of consolidation taking place here, which means that we are on the edge of having the breakdown south, which we also experienced here. So most likely we're going to get a similar case. And also, if we're looking at the 2-year yields, it is getting into a structure that we are most likely going to have a reversal taking place. Just barely swept the high, starting to drop down, which means that the markets are assuming that the chances, and that was the initial move based on the unemployment data last week, that the markets are not assuming, based on the bad economic data, that we continue pursuing this. And you should realize that there is a window where if the yields are going to fall, correct, or stabilize, and the rate hike policy is going to end, most likely the money printer goes brr, and also the rates need to be dropping again to fuel the economy, which means that we're going to have a phase where Bitcoin and risk-on assets will do well, or actually gold will start to do well. And I mentioned before, gold and Bitcoin are very correlated to each other. In this case, I think that we're getting towards the end stage of the yield run at this point. The 10-year yield is also finding itself into a resistance point, or at least into distribution. So this is a key one to keep an eye on for tomorrow. Perhaps I'll be making an additional update after CPI comes out too. Now, when we're looking at the markets for Bitcoin, or the total market cap first, I think that we can ultimately say that we're still consolidating at this point. We are still making higher lows, higher highs. We are in that period of consolidation before we start to break out. Question is, are you going to have a correction first and then rally, or did we finish the correction and going to continue from here? If we're looking at the weekly perspective for Bitcoin, we can definitely say that we are into a stage of reclaiming the 200-week MA and EMA, and based on that fact, we can actually start releasing continuation to the upside. So we are eager to break this high, as we have been constructing higher lows here. And if we're going to do that, we're going to have a quarter of at least some momentum, which is going to push the markets even more. Now, Bitcoin is just consolidating beneath the crucial resistance, right? So we are looking at a case that we are still facing 32.5k as a critical resistance to break through, and we are still holding this range low from previously, which is 30k. If we are not going to hold that, we're going to have a substantial correction taking place. So definitely keen to keep an eye on that. And now the scenarios are as follows. First, we've got this big gap here. If CPI comes in a terrible way, it is very likely that we're going to start falling and taking out these lows, right? So as a sense, we've had a pretty substantial wick yesterday. Why was that? Well, we took out the low, started grinding up, taking out these highs, short liquidations, through which the market started to rally, leverage traders jumping into the markets, and profit taking from the wheels, through which we started to swap back in. So now we're just consolidating here, and the scenarios are quite simple, right? If we're going to have bad economic data on CPI, it is very likely that we're going to take out the lows that we have here, right? We're just building up for a substantial correction south, and then I will be looking at a case that I'm longing around 28.5 to 29.3, I guess. That's going to be the area that I would prefer to look for longs. On the other hand, if that is not the case and we hold the area at 30.2, because I think ultimately you don't want to drop beneath these lows at this point. So you're looking at a case of 29.9 to 30k as a potential support. If that sustains and we grind back up to the highs, that is the moment that we are actually going to have a breakout taking place. So if that grind continues, I think that you want to focus on Bitcoin, and when Bitcoin consolidates after the next push, that is when altcoins start to rally off, as we are still 10 months prior. So the scenarios that you're looking at is, if we're going to get a dip into 30.0 to 30.2, that is a long area. If we're going to grind back up, the flip here might be an aggressive long entry zone. And if we lose 29.9, of course, this is your short trigger towards longs here. Positive CPI, even though CPI is 3.3, but then core comes in positive, we start to rally. If there is a bad CPI and it's going to be higher, be aware of being flexible and looking for longs around 28.5 to 29.3. That is the update for today. I'll be back tomorrow with a fresh new one. Ciao.